AI-fueled stock rally dealt $1 trillion blow by Chinese upstart. The Chinese upstart referred to here is a company called DeepSeek. David, when I think of China, I think of it as being a derivative, a parasite, really. China's very good at spying on us and stealing our technology and so forth and working with it and maybe making some improvements. But I usually see the U.S. as in the lead and China trying to catch up with us. Has China stolen a march on us when it comes to artificial intelligence?
Well, at first glance,
are we chasing China?
It certainly appears so at first glance. However, I will tell you, one of my good friends, David Nicholas of Nicholas Wealth Management, they're in the Atlanta area. He was actually recently on Fox Business just the other morning. Coincidentally, he'll be coming to the Tax Mastermind this week. He'll be visiting us here. But David's a good friend of mine. He's the one I actually got to ring the New York Stock Exchange bell with last year. So David was actually on Varney and Company and discussing this very issue. And some of the facts that are coming out here is it really true? Did they really get this to work with a smaller amount of GPUs? So you understand is OpenAI, which is basically owns ChatGPT, and you have all these versions of AI. There's over 400 AI companies in Silicon Valley now, right? And they're all trying to figure out how to make these language learning models work. And it's the earliest form of AI, but basically it scours the globe for information and tries to give you answers in very quick real time, right? So it can speed up productivity. But the amount of GPUs, these very expensive chips that NVIDIA is the world's best producer of, is insane, and that's what's driven their sales and the price and the margins they've been able to hold on these products. Well, if this is true, over the weekend, the epiphany, this came out Friday, but no one it kind of took the whole weekend for people to realize, well, wait a minute, we wouldn't need to do all this capital extra expending, right? So last year, Meta, Amazon, Apple, the Mag 7, right, the Magnificent 7 stocks spent $66.8 billion last year on chips they're not even using, right? Just because they do not want to get behind in the arms race. They do not want to let somebody else have the chips and when they need them. Well, do they need those chips? We don't know. If DeepSeek's reality that they produce this is much less, you understand, it's a 9.3x efficiency. Therefore, NVIDIA would have to get smacked in price. It would go down 90% potentially, right? And we saw it get knocked 17% on Monday.
Let me read one sentence from the Bloomberg story here. Then came DeepSeek, a Chinese startup whose AI platform appears to look as good as anything on the market at a fraction of the price and a sliver of the energy consumption, which is what you were just talking about.
Well, and again, I'm going to reference my friend David Nicholas. There are stories out there, and I asked him to actually get me some more information, but there are stories out there that maybe some of these HB1 visa workers that were Chinese were smuggling some of these chips out of the country because, as you understand, there was a law you couldn't sell these chips to China to keep us ahead in the arms race. So maybe they actually are using way more chips than what we think they are, and maybe they're not as efficient. Again, this story will unfold quickly and we'll find out. But if it is actually true, then there's going to be a major price resetting in the marketplace. Now, I've been talking about the overvaluation for a little while now. Markets can get irrationally exuberant. Greenspan's old saying from 1996. And so certainly this could be the catalyst that sees the market roll over. I will also point out the NASDAQ, which is tech-heavy, Chip, has started to roll over for sure. And we're seeing a divergence between that and the other major indices, the Dow and the S&P. The last time we saw this divergence on a monthly chart was exactly 2 years ago, or 3 years ago, January of 2022. Well, I don't know if you remember, but the markets lost over 22% that year, all the equity markets, and the bond market suffered a 15% loss. So risk appetite, you might want to understand if you're overextending your risk at this point, but this is definitely going to lead to a repricing of the market. The question is, does it do it right away or does it do it slowly over time?
Well, what sounds ominous to me is that the markets have been doing well, even though you've noted before, oftentimes there are weeks in which a majority of the S&P 500, for instance, is down, but that Magnificent 7 has been carrying it for a year or two. But the shockwave that hit NVIDIA, this is a shockwave that could hit the Magnificent 7, right? right?
Yeah, and so what we would
that's
want
why
to
this
see.
is so ominous.
So if we want to see the markets take the next leg forward, right? So I don't think we're going to make super all-time highs. We can certainly make new all-time highs here in the very near future, but we're either going to do one of two things, Chip. We're going to enter what we call a trading range for the next 2 to 4 quarters, where the markets kind of go up and down at a 5% range while earnings catch up. And so to see that, you need to see a broadening out of the market. Now, the good news in January, we have top 3 sectors up over 6% each is communications, healthcare, and financials in that order. So those sectors which were not performing while the Mag 7 was running in the last 2 years are actually leading the market. So we're seeing a sector diversification. That is healthy. That's a breadth of market. But what we're not seeing is the money flow follow it yet. So to see conviction, we would need to see more money flows in there. Right now, it's very light money flow. Even though they're outperforming, they're not getting chased with the big institutional dollars. So we're either going to correct from here, reset the prices to a normalized value, or we're going to get in a trading range for a while. So again, do you have a performance plan? Do you have an allocation that diversifies you in a way that you could sustain both of those scenarios? That's what you need to be thinking about with your portfolio. And we would be happy to run a complementary risk analysis and show you what the volatility or the beta of your portfolio is.